Hi there, hope you're doing great today. So I thought I'll do a quick video on self-directed retirement accounts because this is a question I often answer from current or prospective investors. And let me tell you, not all retirement plan options are created equal. I have actually a couple of pieces published on that topic in my newsletter, which you're welcome to subscribe to via the link below, or in my social media channels, which you're welcome to follow me on. And before we dive into the topic, just a quick reminder that my videos are for educational and entertainment purposes only and do not constitute tax, legal, or investment advice. So there are two types of retirement accounts. One is the self-directed solo 401k plan, and the other type is the self-directed retirement account. If you're self-employed or perhaps have a side business that generates fee income, again, not necessarily rental income because that's considered passive, but some sort of active fee income, you may be eligible to set up a self-directed solo 401k plan. And it's important to remember that you, apart from a spouse, you shouldn't have any employees. If you do, then it won't be a solo 401k, but there are other retirement plan options that you may want to consider. And the advantage of that is that it accomplishes the same goal as allowing you to invest in alternative assets in addition to stocks, bonds, mutual funds, ETFs, and such. So you can invest in real estate, commodities, and such. The self-dealing rules will still apply, but it allows you more flexibility, you're more hands-on, and you are able, in most cases, not in 100% of the cases, but in most cases, to avoid the what I'm about to share with you, the unrelated business income tax and the unrelated debt finance income tax. Those two would apply to traditional IRAs, and so if you are fully employed, perhaps you have a rollover from a prior employer plan or rollover IRA that you set up a while back. In that case, the solo 401k option would not be an option for you, so you're most likely going to have a self-directed IRA or checkbook IRA. Which one you choose, again, really depends on how involved you want to be. If you are more hands-off, in that case, you will probably benefit from the additional support and supervision of working with a custodian, and you'll basically be going through them as you take on the individual investments to ensure that you remain compliant with the regulatory requirements and keep the tax shelter of your retirement plan. And that's just an extra step that you have to take, but the benefit of that is that you'll get a lot of support in terms of the annual reporting requirements, filing requirements, and such. The checkbook IRA is a self-directed IRA option that gives you a little bit more flexibility. Again, with IRAs, and unfortunately, you will be faced in most cases with the so-called unrelated business income tax, and specifically unrelated debt finance income tax, which is a type of UBIT that's typically assessed, especially when you take on investments that have been financed by debt, and I have more discussion around that topic, or can recommend additional book resources for you to dive into. But it really boils down to, do you have active income coming in or not? How involved you want to be or not? And the additional tax considerations, how important they are to you or not. So I hope you found today's video helpful, and if you did, please like, share, and subscribe, and I'll see you at the next one. Oh, and one point I wanted to make: if you need additional resources on self-directed IRA or solo 401k companies that my investors and I have worked with, I'm also happy to share those. So you can just send me a private message and I'll gladly share those with you. Ciao!